So I guess the first question has got to be, you're not, obviously not a banker, but you're a venture capitalist and you know the ecosystem very well. So tell us what happened at Silicon Valley Bank and what the situation is.
Well, I think you can trace everything back to inflation fundamentally and then the commensurate rise in interest rates. So inflation, if you quote, remember that quote from Oppenheimer about here I am, destroyer upon worlds. Inflation is the equivalent when it comes to the economic worlds. And inflation is very insidious, that it's very difficult to project and to predict. Even the most astute analysts and economists have a very difficult time projecting forward inflation. It's like virality of a social media post. It's very difficult to predict the one that's going to take off. So you have this sequence of events where inflation is the real cause, the root cause of everything. You have a tremendous increase in interest rates. And then, like you said, I'm not a bank analyst, but it's really easy to see that you have a disconnect between the duration of deposits, assets, and the duration of bonds. So when interest rates go up, bond prices go down. If you held these bonds to maturity, there's not a problem. But when there's a run on the bank, and in the case of Silicon Valley Bank, tens of billions of dollars of outflows are going out in a single day, you have a problem. You have a liquidity problem. And then today what we're seeing is a contagion type of effect, contagion in quotes,
Right.
where other institutions are being affected, where people are looking at who else is weak, what other institutions out there have problems.
So they're looking at these other, because at the time of this recording, we've got the situation with Credit Suisse and some potentially other European banks. We had the shutdown in New York State as well with another bank. So in these situations, is it just investors looking at the bank's fundamentals? Is it the depositors? Who exactly is worried about these things?
Well, Schiller of Case Schiller fame at Yale, he published a phenomenal recent book about how the markets are driven by story and narratives, just like our human persona is. And right now, the story is what's the next weak financial institution? Not dissimilar to what we saw a couple cycles ago, where we went from country to country to country. It was Greece, and then the next country, the next country. And then we went from Bear Stearns to Lehman Brothers. What's the next big institution that might be, exposed to mortgage-backed securities? In this case, Credit Suisse is the weak institution. I used to work at Credit Suisse, it's my old alma mater. They raised money at substantially higher levels. Today, their credit default swaps, the price of the institution failing is at an all-time record high. The stock is at an all-time record low. And so basically, when the market is looking around to see who's the next weakest institution, that's what's happening over in Europe, and that's causing additional concerns.
So tell us, moving away from the bankers for a second, but your interest and your expertise obviously is in the tech finance ecosystem. So give us a sense of what the impact so far has been on that ecosystem.
Well, the impact is primarily on the innovative startups and the venture capitalists, people like myself. So in Silicon Valley Bank's case, like it actually took over 10 years for the last depositors of Lehman Brothers to get their money out. So when people saw that there might be a problem at Silicon Valley Bank, there was this huge rush to take out as much money as possible. And if you had, there's this one organization, Circle, that has over $3 billion at Silicon Valley Bank. And if you need that access to that money to pay your payroll or to pay your bills, you've got a big problem.
Yeah.
So what VCs are doing is they're right now organizing things like how do we give emergency loans or emergency financings to these startups. The startups are trying to figure out how do I get access to my liquidity. All the employees are trying to figure out what's going to happen to my job. And so there's this kind of fear factor. So actually, in a way, fear is the real virus. That's the contagion that's affecting everyone.
We're going to come back with our guest, Ray Sharma. He is executive partner at Extreme Venture Partners. Going to continue our discussion a little bit more on the impact and the after effect of Silicon Valley Bank. And then we're going to get to the real reason you're here. I know you want to talk about ChatGPT and what's happening with AI. Stay with us. We'll be back right after these messages.